So India's Pharma borrows Dr. Reddy's has just dropped its Q4 results, and it's nothing short of impressive. At first glance, it's a blockbuster quarter. Revenues crossed 8,500 crore, up 20% YoY. But here is the ticker. Even without the newly acquired NRT business, core revenue still grew 12%. PAT surged 22%, and EBITDA margins jumped to 29.1%. This isn't just growth, this profitable, disciplined growth from one of the top pharma companies in India. So, what's fueling this engine? A sharp uptick in the global generics segment, stellar growth in Europe thanks to the NRT acquisition, and steady momentum in India and emerging markets. They launched 26 new products this quarter alone. That's execution at scale. Meanwhile, R&D spending stayed strong at 8.5% of revenue, signaling big bets on biosimilars and complex generics. But this isn't just about one good quarter. So Dr. Reddy's is playing a long game with a solid balance sheet, zero net debt, and strong free cash flow. It is sitting in a powerful spot. So if you're an investor looking for steady compounder in the pharma space with global ambitions and domestic dominance, Dr. Reddy's might be one good stock to watch. So let's break down the numbers, the outlook for next year, and also see whether this stock is worth your attention. So let's dive in to the details of this result. So they announced the results on Friday, just a couple of days back after markets closed. So this was the estimate. So the estimates were 18% YoY growth and revenue growth and 12.5% profit growth. So the results, revenue up 20% and profit up 22%. So the results have beaten estimates. So if you look at the last 10 quarters, right? So 10 to 12 quarters, they've been growing between 15. In the last few quarters, they've been growing only in single teens, so 13 to 16%. So when compared to that, this growth is phenomenal, 20%. They're going back to 2023 days. And if you look at the net profit, it is also on an average, they've been growing at 7% in the last few quarters. Whereas now they have grown 21%, which is again a strong signal. Overall, if you look at it, Dr. Reddy's results, it has beaten estimates. Revenue is up 2% quarter on quarter, 20% YoY, so 8,500 odd crore. And EBITDA is 29% of revenues, 2,474 crore. Gross margin is down by a few percentage points. So last year it was at 58.6, last quarter it was at 58.7, and now it has come down to 55.6, but still it has come out with a 25% increase in PBT YoY, and PAT has gone 22% YoY and 13% QQ. So blockbuster results from them. So let's look at some of the highlights from their conference call. So margins overall improved, contributions from the so this is the contribution from the acquired business has played a critical role in their growth. So global generics grew 23%. There is a significant revenue growth seen in European market, which is very good, 145% YoY. There is a steady growth that is seen in India, emerging markets, and North America. So R&D spend continues to remain high. 8.5% of your sales as R&D expense is something that is really good for a pharma company. So they continue to invest in biosimilars, complex generics, and novel oncology assets. They have also declared a dividend of 8 rupees per share. They have an RoCE of 27.7%, which is again very good for a pharma company. So after the acquisition of NRT, they have been seeing decent growth. They are going to do an integration with the NRT business, which is going to help them to sustain double-digit growth in the next year as well across all the key markets like North America, Europe. And their pipeline, as mentioned earlier, includes a lot of biosimilars like rituximab and denosumab. And they have filed a lot of ANDAs in the US. There is a strong traction in India's vaccine and branded segments. So overall, if you look at it, right, so they have 24,500 plus crores in cash, very low debt, strong free cash flow. So fundamentally, the company looks very good. Financial strength with the 25,500 plus crore can be a good indicator to do future acquisitions of complementary companies. So let's look at the valuation. So if you look at the valuation, it is at let's look at its valuation. So it is at around 96,000 crores. The stock price to earnings ratio is still cheap, 17 for a large company is pretty good. So they have minimal debt. They have an RoCE, overall RoCE of 23.1%. And look at the current market price to free cash flow, which is again close to 40, which is really good. So overall, the company looks attractive and on a fundamental valuation perspective as well, from a result perspective as well, and also from a future potential point of view as well. So if they continue to do strong execution, especially in biosimilars and generics, and if they succeed in US launches, it can become a solid long-term compounding machine for investors who patiently wait for it. So in terms of technicals, let's go to technicals. So so if you look at the technicals, right? So on a daily chart, it looks bullish. So it turned bullish on 23rd April and it continues to remain bullish, even though Friday was a day when the entire market fell. In fact, the last week was a fall, huge fall for the market, but still it continues to remain bullish on a daily chart basis. From a weekly point of view, it remains bearish. So we have to wait till Friday to see if this can be a good medium term bet. If it turns bullish after a week, then it can sustain its run for a good few weeks. On an hourly chart point of view, it is again remains bearish over the last 4 trading days. It has remained bearish because the market itself went down. So we can expect a gap up opening on Monday. So hourly chart may turn bullish. So a trend reversal can happen on early chart on Monday. It can turn bullish. A gap up opening is possible on Monday. 2 to 5% up move is very much on the cards, and it can continue to show a decent up move in the next few weeks. So this stock is a good candidate for short to medium term because of the phenomenal result that has been announced by the company. Overall, if you look at it, a strong quarter from Dr. Reddy's with expanding margins, new launches, and a focused R&D pipeline for the future. So the stock is showing bullish signs on the daily chart. So even though the weekly and hourly charts look bearish and weak, which is a classic sign for short-term indecision. So it could open gap up on Monday, and if it sustains and closes strong this week, it might turn into a both a solid short-term and medium-term opportunity. So with a clean balance sheet, strong cash flows, and promising FY26 prospects, Dr. Reddy's is building serious momentum. So if you are looking for a fundamentally sound pharma company with near-term triggers, they should be on your radar. So thanks for watching this video. If you like it, please share, subscribe to our channel if you found this video useful. If you want us to do a video on a specific topic or a specific result, we can post it as a comment. We'll respond back to you with a video on it. Have a great Sunday. Bye.